This is Bruno from Spanguru.es, and this is the Spanish Taxes webinar. Thank you so much for joining today. Today is the 25th November 2025. A little bit about Spanguru.es. Our objective is facilitating the relocation process for English-speaking foreigners to Spain since 2014. You can find great reviews on Trustpilot on Spanguru. In fact, we are at 190 five-star reviews on Trustpilot. So you are in very good hands. My name is Bruno, and I run Spanguru.es. You can use Spanguru.es for free. Spanguru is 100% free. Everything you find on Spanguru, you will not be charged for using it. And you can subscribe to my weekly newsletter that I send every Monday to 15,000 readers. You can watch the YouTube videos on Spanguru's YouTube channel. More than 1,000 videos, more than 7,400 subscribers, blogs with almost 2,000 articles, and a huge community with an aggregated total of 150,000 members with dedicated groups for Spanish immigration, for non-lucrative visa, digital nomad visa, Americans in Spain, and so many more. Some interesting sections that I think is relevant for you to know that they exist on Spanguru. I will share my screen. I think it's easier than the presentation. You can see here that I have the Move to Spain checklist. You can join 7 free webinars right here, and the weekly newsletter, and the destinations. Also here you can read some reviews, and here you can join or watch the YouTube channel. The Move to Spain section or checklist, you can find it here. I think it's very useful because it lists every single thing that you need to do. Of course, every case is specific. Okay, if you're moving with family or under a digital nomad visa, things will be a bit different, but in general, these are things that everyone must do, okay, in order to move to Spain. So it's every single step with videos, articles, and so much more. And of course, here, all the other webinars that you can join today, every 15 days, each of those webinars, etc., etc. And if you want to engage with professionals that can help you out moving to Spain, or if you're living here, yes, you can push here, get expert help or services, right? And here you can find all the vetted partners, right? So my vetted partners, I have been working with them for several years. You have immigration lawyers, sworn translators, apostille services, legal services for Puerto Ricans in particular. If you want to get your TIE, your NIE, your empadronamiento, also you have their partners that can help you. Health insurance for Spanish visas or health insurance policies in general, medical certificate, travel health insurance, so many different services. And of course, I have tax experts who can tell you or can run a simulation of your taxes, have tax accountants who can do the recurrent filings in the US, in Spain, and you also have financial planners. Yes, this is people who understand the, let's say, cross-border regulations and can help you structure the way your worth or assets are structured, okay, in order to move to Spain and get mortgages, etc., etc. So all that, of course, those are professional services that, of course, will charge for their consultations or packages, etc. Otherwise, the rest of Spanguru is for absolutely free with all the sections that I showed you, okay? So now let's move on. With this disclaimer, this presentation is for general information only and is not legal, financial, or tax advice. For personal guidance, consult a qualified advisor, find trusted experts on Spanguru.es, and Spanguru is not liable for errors or outcomes from using this information. I'm not a tax advisor, okay? So it's important that if you want to get personalized advice, please engage with recommended professionals that you can find on Spanguru.es. So the objectives for today, first of all, hopefully you will gain an overview of Spanish taxes so that you understand the main key tax categories in Spain, learn the basic principles of taxation in Spain, how things work, prepare to have more informed conversations with professionals, with tax advisors, so that you engage with them more effectively and you ask more precise and informed questions. Clarify the role of professional tax advice, and hopefully you understand that this presentation is to provide general information and will never replace personalized tax advice, and you understand and recognize how individual circumstances can significantly impact your tax liabilities. And other key considerations for expats: learning about potential tax implications with a focus on US and UK nationals, but I would say 95% of the content in this webinar applies to anyone moving to Spain, and be aware of compliance requirements and deadlines to avoid potential penalties. Now, let's talk about the probably most important concept in Spanish taxes, which is Spanish tax residency. You become a tax resident in Spain and must pay tax on your global income if any of your following conditions apply. And not only on your global income, but potentially on the net value of your assets and rights as well. First condition is if you spend over 183 days in Spain within a calendar year from January 1st to December 31st, you could become a Spanish tax resident. The days are counted regardless on how you spend them in Spain. So they don't have to be consecutive. It doesn't matter your immigration status. For example, if you come to Spain on a scouting trip on a certain calendar year and you spend, let's say, 1 month in Spain, those 30 days will count towards your count of days of Spanish tax residency in that calendar year. Therefore, you have to be careful because some people come earlier in the year on a scouting trip, they go back to their countries, get a visa, move to Spain, yes, thinking that they're moving after July 2nd and they will only spend 192 days, but they forget that the days as tourists also will add up, and therefore making them Spanish tax residents. So be careful with that. Second condition is if your main source of income comes from Spain. Third condition, if your family lives in Spain. Okay, so which date is important also during the calendar year is July 2nd. Why is it important? Because there's only 182 days left until January 1st next year, which sets the clock back to zero because it's a new tax year. Okay, as we said, the consequences of being a tax resident in Spain is that you will be liable of paying taxes to the Spanish tax authorities. Now, it's important to clarify the differences between the Spanish tax year and the Spanish immigration year. Very different things. As we mentioned, the tax year is a calendar year. So every January 1st, the clock goes to zero. Yes? For example, if you sell your home on December 31st and you move to Spain on January 1st, following year, then your sale of your home will not be liable for capital gains tax because it would be in the previous tax year and you were not a Spanish tax resident during that year, right? Now, the Spanish immigration year, it's a natural year. Therefore, if you move to Spain on July 2nd, your immigration year starts on July 2nd, and it's individual, right? Depending on when your residency, your immigration residency started, right? So it will go until July 2nd the following year. So another way to see it is that those years may or not overlap perfectly, right? As we said, if you move on July 2nd, you can see in blue, the natural year goes until July 2nd of the following year. But during the first tax year, you wouldn't be a Spanish tax resident, at least per the condition 1, okay? And in the second tax year, neither, right? Still, you have spent a natural year in Spain, complying potentially with your minimum stay requirements from an immigration perspective. Now, let's talk about non-residents. That is, if you have income sourced in Spain, but you are not an immigration, let's say, from an immigration perspective, a resident in Spain, right? For example, you own a property in Spain, you rent it out, you get income from that property, okay? But you spend less than 183 days in Spain. Still, you have to pay taxes for all your income that is sourced from Spain, right? And it will depend whether you are an EU national or associate countries passport holder versus a non-EU or associate countries passport holders. For example, for non-EU passport holders who are non-residents, normally they will be paying a 24% tax on their income, depending on the type of income sourced from Spain. So you will still have to file taxes to the Spanish tax authorities, but you will pay a different rate, okay? I have a question here. The numbers quoted, such as 19%, are constant regardless of your income. The brackets don't shift with income. As far as I understand, these are not progressive brackets for non-residents. These are not progressive. Like if you are a resident, your income tax is progressive, and that range from 19% to 47%, roughly, depending on the region where you're a resident. but for non-resident, these are flat numbers. Now, let's go to tax systems and obligations in Spain. There is a general tax regime and there is a special tax regime. Under the general tax regime, you have personal income tax, you have regional wealth tax, which is taxes on the net value of your assets and rights that you hold. There is a nationwide solidarity tax, which is a wealth tax, but for the whole country, okay? And you have the 720 informative form, where you declare the existence of your overseas assets. Now, there is also a special tax regime, also known as the Beckham Law, okay, which mainly the eligible people for this special tax regime are employees moving to Spain, okay? If you're a contractor, for example, highly probable you're not going to be eligible. If you're a retiree, you're not going to be eligible for the Beckham Law. So employees, W-2 in the US, for example, moving to Spain with certain requirements, okay, and conditions, could become eligible for this special tax regime. Talking about the advantages and cons of this special tax regime, the Beckham Law, the income from outside of Spain is not taxed except employment income. But there's only a flat 24% tax rate, okay, that will apply to your employment income. You don't pay Spanish income tax on your worldwide income. For example, if you have properties and you rent them out outside of Spain, or you have businesses out of Spain, you don't pay taxes on that income, only employment income, okay? No requirement to submit the 720 form or submit or pay the wealth tax in Spain. Now, there are certain cons for the special Beckham Law tax regime, and tax experts will tell you that if you make less than 55,000 euros of taxable income per year, the benefits, let's say that there is additional administrative burden that may outweigh the benefits, okay? So maybe you will be better off being under the general tax regime if you make less than 55K per year, because there are no family deductions, no allowances, and you may end up really paying less taxes and having less, let's say, issues or administrative burden going into the general tax regime if you make that money, okay? If you're below that threshold of 55,000 euros, 60,000 euros. Now, let's go with the first tax obligations, the overseas assets reporting, or 720 form. This is not a tax per se. It's an informative form where you disclose the existence of your assets abroad and rights held abroad, okay? Now, you will divide them into different categories. For example, bank accounts, investment, real estate, cryptocurrencies. If any of those categories is over 50,000 euros, you have to declare the full existence of everything into that category. For example, you have 10 bank accounts with 5,000 euros in each outside of Spain. The total for that category is 50,000 euros. Therefore, you need to declare the existence of those 10 bank accounts in the 720 form. Do you have to declare the 720 form every year? No, only if there are variations of more than 20,000 euros per category, or if there are assets closures, okay? Now, the deadline to submit the 720 form is March 31st, and if you work with a gestor, with a tax accountant, normally they will start preparing it 3 months before, January 1st. And once you become a Spanish tax resident, that's the time when you will start presenting the 720 form. So, for example, if you become a Spanish tax resident in 2026, you will have to submit the 720 form latest March 31st, 2027, okay? For the values of your assets and rights held abroad at December 31st, 2026. Second tax obligation, income tax filing, personal income tax, or IRPF. There are different types of taxable income. You have ordinary income and investment income. Depending on those two categories, there are different progressive tax rates. For the ordinary income, these are subject to progressive tax rates that range 19% to 47%, with some regional variations, okay? They can even go over 47%. Under this category, you have salary, rental income, and business earnings. Now, under investment income, you have dividends, interest, capital gains tax, and these are taxed at lower rates, ranging from 19% to 30%. The deadline to file the personal income tax is June 30th, following the first tax year. Again, if you become tax resident In Spain, in 2026, you will have to file your income tax latest June 30th, 2027 for your taxable income in 2026. If you work with a tax advisor, with a gestor or tax accountant, they will start preparing this filing on April 1st. Now, remember that if you are working in Spain as a contractor, as an autonomo, not only you need to file the yearly income tax, but also you will have to also do it on a quarterly basis. And normally you will pay 20% of your income on a quarterly basis. You will advance this payment. And then when you go and file your yearly income tax, you will deduct what you paid already and pay the difference. Okay. Now, for US citizens, as you probably know, US passport holders always have to file taxes and eventually pay taxes to the US, even if they're not tax residents in the US, right? And to file income taxes or to file taxes in the US, normally the deadline is April 15th. Now, if you live overseas, you get an automatic extension to file your taxes. There's a discussion, okay, among Americans whether it is better to file taxes first in the US and then credit those taxes towards the payment of your Spanish taxes, or vice versa. First, you get the extension until June 15th, you file your taxes in Spain, get a credit, you credit towards your filings in the US. Now, the answer to that question will a bit depend on your situation, okay, and the type of taxes that you need to file. Generally, most people that I know file their taxes in Spain first and credit their payment of their taxes in the US. There is another extension that goes until October 15th that you can also request as well, okay? Yeah. And why do you credit the payment of your taxes? Because there is a Spain-US tax agreement, a bilateral agreement that avoids double taxation. Therefore, you will not pay taxes twice on the same thing, okay? It doesn't mean that you will pay less taxes, but at least on the same thing, the same category, you will not pay taxes twice. Question here, are US government pensions considered taxable income? Yes. I mean government, sorry, I didn't read the government. No, according to the US-Spain tax agreement, government pensions, public pensions, let's say they are taxed in the country of origin. Okay, so if you have one from the US, it wouldn't be taxed in Spain because of this bilateral agreement or tax treaty. Now let's talk about how the tax brackets work. Many taxes in Spain work with progressive tax brackets, right? And when people see the income tax brackets, you know, the first thing that comes to their mind is, well, I have to pay 45% income tax for my 100K taxable income. Why do they ask this? Because if you look on the table on the right, there you have the progressive tax brackets for ordinary income that go from 19% to 47%. If you see the fifth bracket, 60,000 euros to 300,000 euros. So if you make 100K, will you have to pay 45% income tax? And the answer is no. Thank God you won't have to pay so much. Spanish taxes are high, but not so high. So the way that you calculate the progressive tax brackets is that you start with the first bracket for that amount of income. So let's put it into easy words. For the first 12,450 euros that you make, you will be paying 19%. For the next 7,500 euros that you make, you will pay 24% income tax for that amount of money. For the next 15,000 euros, roughly, you will pay 30%. Okay, therefore, you will be paying a median or average of those tax rates, making it that for 100K taxable income, you will be paying around 36%, okay, of effective tax rate and not 45%. These are all illustrative figures without taking into account allowances, deductions, and many other things, but so you understand how the progressive tax brackets work, not only for this income tax, but for other taxes that apply also progressive rates. And there's also, again, a calculation for illustrative purposes only. If you're making 30K euros taxable income, you'll be paying 24% effective tax rate. If you make 40K, you'll pay 26%, for 50K, 29%, for 60K, 30%, for 70, 32%, and for 100K, as we said, 36%. Okay, so as you can see, these are progressive, let's say, rates, right? So the person who makes 30K will be paying really 24%, and it progresses to 36% until 100K, and so much more. Someone is asking here, sorry to interrupt, but I had to share. I just booked 2 appointments for BLS Miami. Yes, congratulations, really. The appointments issue is a really, really big problem. I'm happy that you were able to book your appointments, especially that walk-in appointments for BLS Miami they stopped doing them. So again, you have to go through the appointments nightmare. So happy for you, Jose. Next question, is U.S. Social Security income considered taxable income? Yes, it is. We'll see that in a slide in the later on. Third tax obligation, wealth and solidarity taxes. Now, the wealth tax is a regional tax, and the solidarity tax is a nationwide wealth tax. Yes, the regional wealth tax, Impuesto sobre el Patrimonio, depending where you move in Spain, there are 17 regions. They have different thresholds. Okay, for example, Madrid and Andalusia, Cantabria, Extremadura, these are favorable regions because either their threshold is too high or they have 100% rebate on the payment of this tax. Okay, so basically they don't have wealth tax. Okay, and there are other regions who have only 50% rebate, etc. So depending where you move, you have to study your situation and where you're moving to simulate whether you will have or you will be liable for paying this tax. Catalonia, for example, is not favorable. It has a low threshold of 500,000 euros net worth, and over that, okay, without allowances or deductions, you'll have to pay wealth tax. We'll see a calculation later on. Now, Valencia, for example, they raised the threshold from 500,000 euros to 1 million euros, applicable very soon on December 31st this year. So it became more favorable region, Valencia. Now, there's something called the 60% rule, which is really hard to explain how you calculate it. But what I want you to take with you today is that this is especially interesting for people who have a high net worth, but a small income in relation to the high net worth. And this 60% rule will help them limit their wealth tax liability to 60% of their total taxable income. So you can reduce up to 80% your original wealth tax if certain conditions are met. So in short, wealth tax is capped at 60% of your income, but at least 20% of the wealth tax must still be paid. So have that in mind when you discuss this with your tax advisor. Now, the deadline for the regional wealth tax is June 30th. And for the solidarity tax that we're going to talk later on is July 31st, because what you pay for wealth tax can be credited towards the payment of the solidarity tax, which is a nationwide wealth type tax. Okay, the solidarity tax was recently introduced as a temporary tax, but they never took it away. Probably they will never do. Unfortunately, with every tax that is presented as temporary, unfortunately. Now, the threshold for this wealth tax is much higher than the regional wealth tax. It is 3 million without allowances. Now, there are allowances, certainly depending on the situation. So I think it's 700,000 euros. So really, the threshold will start at 3.7 million assets value. I'm not 100% sure of that, but certainly the threshold for this tax to kick in is much higher than the regional wealth tax. Now, the problem is that regardless where you move in Spain, you could potentially be liable for this tax. Okay, so you need to calculate your net worth, the total value of your properties, of your assets, of your rights held abroad, and other things. And if you are over any of these thresholds, you could potentially be liable for any of these two taxes. Now, let's talk about how you would calculate, okay, someone who is living in Catalonia and is owner of a property in Spain. Yes, how much wealth tax would this person be paying? As we said, Catalonia, the threshold is low at 500,000 euros. Imagine that this person counts all the value of their assets and the rights that they hold, and it's 1 million euros net worth. They have a property. They can deduct up to 300,000 euros of value from the taxable income. Therefore, if the threshold is 500,000 and they can also deduct another 300,000, they have 800,000 net worth value. That is not taxable. Therefore, only 200,000 euros would be taxable. You apply progressive tax brackets for this tax, and this person would be paying 500 euros that year. Now, for 1.5 million, they'll be paying 3K. For 2 million, 8K. For 2.5 million, almost 14K. And then over 3 million, be careful because you would be potentially liable for the national solidarity tax. Okay, so that's how more or less would be calculated. Question, that is per person. For example, for a married couple, it would be 2x that total. So the way it works is that in Spain, and I think in every country that has marriage, it will depend how your assets are considered in the marriage union. Yes, in Spain we have two options: gananciales or separación de bienes. Separación de bienes is that each one of the couples, each individual has their own assets. Okay, whereas gananciales, the marriage, the couple is one single unit. Okay, and they hold your assets. So the way that you calculate it is either individually or as a unit. Okay, right? So go with the tax advisor and explain how inside your marriage you share your assets, and then they will do the calculation. Okay. Now let's see with the next question. 60% rule: limit is applied to income earnings on your investments or on the value of the investment itself. Limit is applied to income earnings. I don't know. Sorry, I don't know how to answer that question very well. So let's move on. Let's talk about some considerations for digital nomads. What about taxes for people who move to Spain under the digital nomad visa and come to work as employees or contractors? So you have two options. Either you are an employee working for a company outside of Spain, okay, or you are an employee working for a subsidiary of that company outside of Spain remotely, or you move as a contractor. Therefore, you become autonomous and you have to pay your taxes and social security in Spain. Now, when you move as an employee under the digital nomad visa to Spain, it's because you were able to produce a certificate of coverage from the social security of your origin country that states that you work remotely, but that your company is paying social security for you in that country. That country has a social security agreement with Spain, yes, and therefore you don't have to pay social security in Spain, yes, and this way you have access to the public healthcare sector in Spain because you're already paying to your local social security, okay? At the moment, UK, USA, Canada, social security certificates are accepted. This can change anytime. Interesting for people who are moving as employees, as we mentioned at the beginning, you could potentially be eligible for the special tax regime, Beckham law, okay, that would enable you to pay 24% on your employment income and many more perks. So that's pretty interesting. Now, if you move to Spain as a contractor or 1099, called autónomo in Spain, the story changes. First of all, you wouldn't be eligible generally for the Beckham law. You have to pay your own taxes annually and quarterly, declare VAT also, and also declare VAT annually as well, right? And not only you will have to do all these tax filings and payments, but also you will have to pay the Social Security monthly contribution. Yes, that will grant you access to the Spanish healthcare system, pay leaves, paternity leaves, pension in Spain, etc., etc. Now, here's a real case of someone who moved to Spain in September 2024. Therefore, after July 2nd, 2024, so less than 182 days in Spain, yes, to become a Spanish tax resident. Then in October, apply for DNV, for digital nomad visa. In November, got approved, and in December, registered as autónomo. This person asked to the group, how do I pay taxes in 2024 as I'm still not a Spanish tax resident? Now, an expert in the group said, for tax questions, if you ask 10 different people, you'll get 10 answers. This is also important. Also among tax advisors. This is a particularly gray area, as you weren't resident until you got your residency card or TA card, so you weren't even officially allowed to work. However, you are supposed to pay tax in the country where you are physically working or generating income. So strictly speaking, on any work performed since September. So tax advisors familiar with the digital nomads who are in this situation would declare or pay taxes on the income that was generated from Spain, even if working remotely, as a non-resident in 2024. And then when this person becomes a Spanish tax resident in 2025, pay taxes as a Spanish tax resident. That's the general consensus, okay? Now, there's also been several things that are changing for autonomous in Spain. So this is an initial news that came out with a proposal from the government to raise the social security contributions. It was crazy. It was really wild. Let's say the increases they proposed, and then they back down from this proposal, and then they're gonna raise them not too much. Okay, but the truth is that there is an agreement with the government, between the government and the autonomous associations, to raise, let's say, the contributions for social security until 2032, year 2032. The question is how fast they apply these raises. Okay, so yes, this is something that you need to follow in order to budget accordingly your increases. But yeah, definitely these two slides are not, let's say, these were news that came out, but then the raises are not going to be that much or that fast. Okay, now an important consideration about this agreement between the government and the association is that not only the contributions will raise per threshold of income, but also as an autonomo, before you could choose how much you wanted to contribute to your pension, okay, to social security. You decided. Okay, now after the agreement, after this proposal is passed, you won't have a choice, and the amount that you contribute will be automatic depending on the income that you are receiving. If you want to know more about this specific visa, like digital nomad visa, you can join my webinar that I have every 15 days. I always send you a recording. It is free, and I am very, very happy that you join it next time. Now, remember that you can ask your questions anytime during this presentation. There's a Q&A session at the end if I didn't answer any question. But if you have to leave earlier and you think that the information in this webinar is useful for you or others, please leave a review on Trustpilot. There's a button there on the green bar on the top that will redirect you to Trustpilot, and it will really, really be helpful if you left a review there. And also, if you're watching this video on YouTube, please comment, ask any questions about Spanish taxes or moving to Spain, anything related to moving to Spain if you wish, and just leave a comment below. And if you like this video, please give it a like. Now, let's continue. I see another question. Wealth tax, is it applied only to Spanish assets or also on your worldwide assets? I think it is on your worldwide assets. That's a great question. Let me just check. That's a great question because I should know it, but unfortunately I don't. Let's go to screen sharing. Okay. Impuesto de patrimonio, bienes en el extranjero. El supuesto bien situado en el extranjero deberá declararse en este impuesto por el controlador de euros en el precio. You need to assign a value of euros to those assets. Los valores mobiliarios negociados, valores negociados en el mercado organizados situados en el extranjero. Elementos patrimoniales adquiridos y todos. So yes, yes, I'm not 100% sure of this information, but right now, if you had to bet, you would be counting the value of those assets held abroad. And also, yes, I almost positively sure about this. Okay. Now let's go with the presentation. Additional taxes in Spain. Some taxes that you need to have in mind. Inheritance and gift tax. This is a regional tax. So depending where you inherit or where you do the gift or you receive the gift, you will be paying taxes. So where the assets are located as well come into play. So it is, again, Catalonia is not very favorable. Madrid is and Andalusia are very, very favorable. For example, people say that it is cheaper to die in Madrid than in Barcelona for this reason. Okay, so, and it is very different from one region to another. The tax reductions, the exemptions vary by region. Okay, and in terms of inheritance, it will depend on the let's say the relationship between the heirs. Okay, if it's a one-level relationship like children versus other more distant relations. So all that it is quite structured. Now there is also the transfer tax or ITP, Impuesto sobre Transmisiones Patrimoniales. This is the tax that is regional. Again, when you buy a home or a property in Spain, you will be paying, for example, in Madrid, 6% of the value of the property that you are buying, you need to pay within the first 60 days of your purchase, of signing the deeds. Okay, so you need to account for that, to have the cash to pay that. And depending, for example, Andalusia is 7%, Catalonia is around 10%, Valencia also around 10%. And there's been a lot of controversial discussions. Let's say a lot of discussion because of a controversial announcement from the Prime Minister, Mr. Pedro Sanchez, who said that for non-EU passport holders who are non-residents in Spain, this tax should be 100% of the value of the property. Okay, and with this, he wanted to solve the housing crisis in Spain, which doesn't make too much sense, because only 2.7% of the transactions of real estate in 2004 come from this particular group of people. So, obviously, a lot of people buy property when they are not tax resident, and then they become a tax resident. So it is just about delaying that purchase, so reducing the impact of this measure. So it looks like it is a political announcement and not really something that will happen. And also, I have interviewed Marcos Gonzalez, expert tax lawyer, and Manero, immigration lawyer from Sterling Abogados. They say it is very, very hard that this really comes forward, because it goes against many basic laws from the European Union in terms of capital mobility within the European Union, etc., etc. Okay, but you never know. We have to keep on following the news, and I will keep you updated. Of course, if you join the newsletter, watch my videos, you will be updated if anything changes in this respect. Now, let's talk about the property tax, or IBI. Once you are owner of a property, you will pay a property tax, which tends to be much more affordable than in the US, for example. People say that in the US, you pay in one single month for the same type of property that you will be paying for a full year in Spain, right? Also, another thing about the transfer tax that I didn't mention, this is in case that you buy a second-hand property. If you buy a new built property, you don't pay a transfer tax. You pay a VAT, a reduced type of VAT of 10%, and that is nationwide. There's also the municipal capital gains tax, and this is different than the general capital gains tax, okay? And it's important because people refer to those two taxes with the same name, but you have to understand that the capital gains tax is an income that you generate from, or the proceeds from a sale of a property, okay, anywhere in the world if you're a Spanish tax resident, and you pay it when you file your income tax latest June 30th, okay? And you will be paying the reduced, let's say, the from 19% to 30%, okay? Now, the plusvalía municipal, if you sell your property in Spain, okay, or only in Spain, you will also pay something called plusvalía municipal or municipal capital gains tax, as they translate it to English. And this is a local town hall tax, which is based on the increase of the land value, okay? And it is different. And you have to pay it right after you sell your property. You have, I don't know, I think 60 days to pay it to the town hall, and very different from the general capital gains tax that you pay, let's say, annually. And now that we mentioned the capital gains tax, yes, now that we mentioned the capital gains tax, how can I avoid it, right? So there's several ways to avoid the capital gains tax, right? Now, the most common, if you are moving to Spain and you are still not a Spanish tax resident, the best is to time the move when you move to Spain, okay? So that when you sell your property, you sell it in a different tax year, in which you will become a Spanish tax resident. Example that I gave before, you sell your property on December 31st, and you move to Spain on January 1st. December 31st, you will still not a tax resident in Spain. And then the next year, potentially, if you spend more than 183 days, you will become a Spanish tax resident retroactively from January 1st. But you sold the property in the previous year, so you wouldn't be liable for capital gains tax to Spanish authorities. This is the first case scenario. Yes, you sell in 2025 and you move to Spain in 2026, right? Now, there's also another way, which is you sell your house in January in a certain tax year, you get your visa to Spain, but then make sure that you spend less than 183 days that tax year. Because, for example, if you spend 183 days in Spain during that tax year, it works retroactively. Even if you become later in the year a Spanish tax resident, you will become a tax resident for the full calendar year. Therefore, the sale of your home will fall into the same tax year, which you become a Spanish tax resident. Therefore, you will be liable. So make sure to spend less than 183 days during that year. Remember the first condition for Spanish tax residency. Now, there are other ways to not paying capital gains tax or mitigate it, okay? Which are, for example, if you sell your main residence and you reinvest all the proceeds into a new primary residence in Spain, you could it could be deferred or avoided, okay? And there are also other conditions if you're older than 65, ways to mitigate it, etc. You also have certain limits to reinvest those proceeds, and also you have to, let's say, accredit, or you have to prove that all this is happening, okay? Primary residency, blah blah blah, etc. So it is quite cumbersome, okay? So the best way to avoid it really is to time your move to Spain if you can, okay? Now, again, this tax is calculated with progressive tax rates that go from 19% to 30%. The way you calculate it, and I have a question here. Gail, thank you so much for asking something. I see here, first question. In your slide on Catalonia, you state assets in Spain. Yeah, if you have a property in Spain, you can deduct it for your wealth tax, if that's what we're talking. I sold, your state assets in Spain for wealth tax. Right. Oh, thank you for pointing that out. I will check it out after we finish and improve it. Thank you so much, Sarita. Now, Gail asks, I sold my house in July 2025, and I'm moving to Spain next week with an NLV visa. I will only have been in Spain for 90 days, adding tourist days and residence days by the end of 2025. So my understanding is that I will not be liable for CGT in Spain, correct? Or 2026. Well, if you become a Spanish tax resident in 2026 and you sell stuff with proceeds in 2026, then you will be liable for capital gains tax in 2026, but not for the sales in 2025, okay? Because you spent less than 183 days during 2025 in Spain, and I assume that your main source of income is not in Spain, or you don't have, let's say, close family living in Spain. Now, let's go with the capital gains tax case scenario, how we calculate it. You purchased a home for 100K euros, you sold it for 200, your capital gain was 100K. You apply the progressive tax brackets, as we saw before, you will be paying an effective tax rate of around 22%, so 22,000 euros capital gains tax, okay? And this, again, are round numbers so that you understand how those are calculated. Now, return in Spain, is your pension taxable? Yes, you will be taxed if you're a Spanish tax resident, okay? And there are different thresholds to declare that pension. Starts at 22,000 euros annual threshold. Below that, you don't have to declare it, but be careful because there are certain conditions that even if you make less, you have to declare it. If you have multiple income sources, the threshold goes down to 12,000 euros aggregate income and only 1,500 euros from secondary sources, and pensions from abroad appear as a second payer. So if they're greater than 1,500 euros per year, a declaration must be made. Progressive tax rates range from 19% to 47% for the pensions, okay? But as we mentioned before, there is a tax treaty between many countries and Spain, like USA, UK, for example, that established that government pensions or public pensions are exempt to pay tax in Spain in this case, and should be taxed only in the origin countries. Now, there's also a controversial discussion from people who say that if you're benefiting from this tax treaty because you're getting your government pension or public pension from your home country, and then you become a Spanish citizen, as generally, depending how you obtain the citizenship, you have to, at least from the Spanish side, renounce to your original citizenship, okay? At least Spain will see you as that you renounce it, even if really in practical terms, no one does, okay? And they cannot push you to do it. And now, people say that since Spain no longer sees you as a dual as a citizen from a home country, then the tax treaty will not apply to you because you're a Spanish citizen now, right? Now, I have never met anyone who was in this situation. Recently, in an NLV Q&A session that I had, one person who joined asked me this. As I said, I never met anyone in this situation. I interview immigration lawyers about this, and they told me that they don't think this would be an issue. You would still be benefiting from the, let's say, exclusion of taxation as per the tax treaty, even if you become a Spanish tax citizen, okay? But it is not clear, the situation, so be careful with that. Now, the allowances for pensioners for ages 65 to 74 is 6,700 euros annual allowance, and over 75 years of age is 8,100 euros annual allowance. Let's talk about taxation of American 401ks and Roth IRAs in Spain. 401k taxation in Spain. The distributions are taxed as general income at progressive rates up to 47%. Round numbers, traditionally exempt from Modelo 720 of overseas assets and rights held abroad, and wealth tax, but caution is advised due to evolving interpretations. That is, you may need to declare them, okay, for these two, for the Modelo 720, and potentially count the value of that 401k for the wealth tax. Roth IRA taxation, investment gains taxed as income at progressive rates up to 30%. This is investment. Must be reported on Modelo 720 annually based on the account surrender value as of December 31st the previous year, and subject to wealth tax with rates varying by region as we saw, and also solidarity tax nationwide. Key consideration, recent rulings, not really rulings, it's a consulta vinculante. This is when an individual asks a formal interpretation of certain rule to the authority. And in this case, and this individual asked the tax authorities whether the IRAs and 401ks had to be reported in 720, and the tax authorities in this consulta vinculante suggested that yes, okay, but the tax authorities are not judges, okay? This is their interpretation in this consulta vinculante, and you need to discuss this with your tax advisor, and probably the tax advisor will tell you what is riskier, if you want to be on the safe side, if you want to take a little bit more risk and maybe not declare. I don't know what your tax advisor will tell you, but it's important that you understand that it seems to be an evolution in the interpretation of tax authorities when Americans move with this type of products like 401ks and Roth IRA. Question here. So they count against limit for wealth tax, but are taxed as income only when taking distribution from them. I don't know very well exactly about this. As I said, I'm not a tax advisor, and this is very, very technical. Not only you need to engage with a tax advisor, but also a tax advisor who is used to file taxes in Spain for individuals who have 401ks and Roth IRAs. The ones that I recommend, Spanguru.es, are used to it, okay, and they know their job and their deals, and definitely will give you an answer. So it is very, very technical, and generally speaking, Spain, let's say that disregards several things that exist in the States that don't exist here in Spain and have different and changing interpretations. Okay, for example, Spain doesn't have trusts, okay, like in the US, and they may consider that any benefits made by trusts are just like normal SLs or limited companies. Okay, so really, like, you need to check with the tax advisor to understand and understand the level of risk that you want to take, or be 100% compliant, which I always recommend. And if you want to know more, you can also read blog posts about all this. 401ks, IRAs in Spain, Roth IRAs taxation in Spain. You can find on Spanguru. You just search Spanguru 401ks, and you have a lot of articles. And you can just search on Google. Now, let's talk about non-lucrative visa. Do I have to become a tax resident in order to renew my non-lucrative visa? Now, I always say, if you plan to stay in Spain for the long term, make sure to consult with an immigration lawyer who knows their job, and consult with a tax advisor. At the very least, those two professionals, you should consult with them before moving to Spain, because your tax objectives may be or not aligned to your objectives from an immigration perspective, okay? If you're planning to stay long-term, you need to have a very clear strategy on how you're going to stay long-term in Spain without making costly mistakes. Why I say this? I am concentrating right now into the renewal of the non-lucrative visa. I'm not talking about if you plan to get the long-term residency, which has its own requirements, minimum stay requirements and other minimum requirements, or if you want to become a Spanish citizen. Now, if your only objective is just to renew your non-lucrative residency or any other temporary residency, you need to understand that now the Reglamento de Extranjería was renewed, the bylaw, okay, not the main organic law, and they establish a minimum stay of 183 days in Spain, right? Now, many people say if you want to renew your NLV, you need to become a Spanish tax resident, which is not entirely true. First of all, because the tax year and the immigration year, as we said before, one is calendar year and the other one is immigration year, right? So, and this rule refers to the immigration year, not the tax year. Second of all, there is a Supreme Court ruling saying that the minimum stay requirements should not legally be added into the bylaw or Reglamento de Extranjería, but on the contrary, should be added to the main organic law 4/2000. Okay, but of course, the legislators had to go through a harder process and get more political agreement in order to change the organic law. But as they cannot, what they choose to do is to, let's say, illegally, as per the Supreme Court ruling, into the bylaw, because it requires less control to do it. Okay, so in the past, the previous Reglamento de Extranjería included a minimum stay requirement of 180 days, and after the Supreme Court ruling, they had to delete it. All right, and people started renewing their non-lucrative residence, staying less than 180 days in their immigration year. Now, they added a new requirement of 183 days per year, and still it has to be seen when they're going to erase it or if it's enforceable. Okay, when I consulted Ainhoa Manero from Stern Abogado, she says it is absolutely not enforceable, that minimum stay. Therefore, you can play with your Spanish tax residency and still be able to renew your non-lucrative visa. I have videos about this. I talk a lot about this in my non-lucrative visa webinar that you can join every 15 days. And you can also watch the recordings. Okay, so it's important that you understand this. I also have a specific video for this. Do I have to become a tax resident in order to renew my NLV? That I published. Okay, and this is a cheat sheet. And I see a question or a comment. Thank you. We've been talking to a tax advisor, and one issue he pointed out is that the US and EU have different rules about investments in things like ETFs and mutual funds. Result: as an American, if we own such assets in the US, they can get tax punitive in Spain. This can require structuring assets in things that Spain allows. That is correct, and that's why if I go here to, I wanted to show you, if I go to Spanguru, and we see here financial services, you also have financial planners. These are the right people to talk to if you need to, if you have investments, and if you have this, let's say, products before moving to Spain. These guys can help you structure them correctly so that you don't take risks, okay, or more risk than you really want to assume. Okay, I highly recommend you. They have a free consultation, as far as I understand. Okay, so really recommended there for this kind of issues. And yes, there are differences between tax advisors, gestores or tax accountants, and financial planners. And in my opinion, if you are in a certain level of net worth and you already have a lot of investment, etc., in general, like any retiree, okay, in the US or UK, after a certain age, you already have your investment, your saving, etc. In my opinion, at the very least, tax advisor, but not only that, also financial planner should be important as well, because there are ways to maybe transfer your pension to Spain if it makes sense or not. Okay, so evaluating all those things may be very, very useful. Now, I try to concentrate everything that we talked today about Spanish taxes into a single-page cheat sheet here. First, tax residency in Spain, 3 conditions. If you spend more than 183 days in a calendar year in Spain, you would become a Spanish tax resident and you would be liable to pay taxes to Spanish tax authorities on your worldwide income and potentially on the net value of your assets and rights held abroad. Second condition, if your main source of income is from Spain. Third condition, if your family lives in Spain. Now, if you're a non-tax resident, if you would be paying taxes as a non-resident on your income source from Spain. Key tax obligations, overseas assets reporting, Modelo 720, once you become a Spanish tax resident, where you report the value of your assets and rights held abroad, in certain categories, over 50,000 euros per category. Personal income tax, a progressive tax rate from 19% to 47% more or less, paying annually, or if you're autonomous, also quarterly. For investment income, it goes from 19% to 30%, like capital gains tax, for example. Deadline, June 30th, as we said. And there's also the regional wealth tax that we spoke about, the solidarity tax at a much higher threshold, but is national. And Madrid, Andalusia, Extremadura, and Cantabria are favorable regions in terms of regional wealth tax. And for example, Catalonia is not very favorable. Now Valencia becoming more favorable as next year. Now, also we mentioned special tax regimes. So you have the ordinary tax regime or the special tax regime called the Beckham law, that if you make less than 55,000 euros of taxable income, may not be worthy to apply for. But if you're making more than that, then may be interesting because you have a lot of advantages. Now, there's also the question about whether the pensions are taxable in Spain, and usually they are, unless they are government or public pensions, as per the tax treaties between Spain and other countries. We spoke about the different thresholds and allowances. We talked about the taxation of 401ks and Roth IRAs and the reporting of these funds into the Modelo 720 and also for wealth tax. We talked about taxes for digital nomads. If you're an employee, you will be paying Social Security in your home country. If you move as a contractor, you will also be paying, apart from your taxes annually and quarterly, you will also be paying your Social Security contributions to Spain. And remember that as a contractor, usually Beckham law doesn't apply. We also talked about inheritance and gift tax, which are regional taxes. Property tax. Once you own property in Spain, you will be paying the IBI, property tax. If you buy a second-hand property, you will be paying a regional transfer tax. Madrid is the lowest, 6%, Andalusia 7%, Catalonia is around 10%, depending on the value of the property, can go up, etc. And if you buy new build properties, 10% VAT nationwide. You also have capital gains tax that we mentioned how to avoid it. In Spain, that is taxed at progressive rates from 19 to 30%. And deadlines to remember: the 720 form, overseas asset reporting, March 31st. Personal income tax, June 30th. Wealth tax, June 30th. Solidarity tax, July 31st. If you're autonomous, quarterly payments for income tax and VAT as well, annual as well. And remember that Spanguru can help. First of all, you can have all this information for free. You have articles, you have videos, you have webinars, all that is free. But of course, if you want to engage with professionals, which I highly recommend, I said it many times in this presentation, you can always find them on Spanguru.es. You can check our reviews. People are happy, you're in good hands. And yeah, definitely worth having a look and shop around and see if this can be helpful for your move to Spain. We can always stay in touch at hello@spanguru.es. I always answer my emails. Okay, maybe I don't know the answer. If I know it, I will tell it to you. But if not, at least I will point you at the information or something that I found for you, or free resources, or telling you which communities you can join, where you can ask for people who are in your situation, and etc. etc. So yes, definitely, I really love to receive an email from you guys and maybe helping you. At least pointing you in the right directions. And of course, you can always join the community, watch the YouTube channel, newsletter, and remember that the content of this webinar is for information purposes only, and it's not tax or legal advice. Please consult with experienced tax advisor. So yes, we have more questions here. Sarita, Bruno, you're a model for exercising while talking. Thank you for an excellent presentation. Thank you so much. Actually, I'm a bit bad. I had a flu, so I'm going that fast today. But yes, the doctor told me, Bruno, you need to walk more. So yeah, I'm a little bit of a hamster here. But yeah, definitely I feel the benefits. And if you work remotely or if you work from home, yeah, definitely I'm in love with the treadmill. It's really changing the way I feel when I finish work. So yeah, recommended. Thank you so much, everyone, for joining today. Please leave a review if you're happy with the information that I shared with you today. It really helps me, helps others find this content. And if you're watching this video on YouTube, please give it a like, comment with any questions, and yeah, stay in touch. And I'll see you around. For the ones who registered, I will be sending you the recording very soon to your emails. And I'll see you around. Take care and have a wonderful week. Bye-bye.
Oh, and one more thing. Apparently YouTube says you're gonna love watching this video right here. I think you should watch it.